Hi everyone, Lou here from Discovery Wealth. This video is the start of a new series where we will explore personal insurances. Although it's a topic we may not think about, any complete financial plan should always cover the what ifs. Even with all the wealth, if your financial well-being is jeopardized by ill health, injury, or even death, we need to address these. Today, I'll be going through life insurance, a product many of us may have, although we may not know it. So, what is life insurance? Some of you may be surprised that there are two main types of life insurance. The first and most common form is called a term life policy. This policy will cover the life insured up to a certain age. As long as you continue to pay the premiums, the policy will pay beneficiaries or the estate the lump sum insured on death. The second and less common type is a whole of life policy. This policy would cover the life insured for their whole life and pay a guaranteed death benefit to beneficiaries. Where this type of policy is different is that a portion of the premiums would be invested and the cumulative investment amount, sometimes called the cash value, would also be paid to the policy owner. The policy owner could elect to terminate the policy which surrenders the death benefit, but they can collect the cash value. This type of policy lost popularity when superannuation was introduced as a means to save for retirement. So how much life insurance do you need? The answer is everyone's needs are different, and this is where seeking advice when establishing your policy could really pay off. The last thing that you would wish on your family was to be underinsured and for them not to have the funds required to continue should you pass. On the other hand, you don't want to be paying for insurance premiums for cover that you don't need or no longer need due to changes in your life. When we speak to clients about insurance, we map out what financial needs your family may have, both immediately and in future should you pass away. Then we calculate a level of insurance that would bring them complete financial peace of mind. Here is a couple of examples of the things we take into account when looking at levels of life insurance. By no means is this an exhaustive list. When taking out a policy, there are a few things you need to keep in mind. The policy can be owned by yourself, your spouse, a third party like a business partner, or even a trust or company. It really depends on what the purpose of the insurance is. Having different structures could affect the taxation of premiums and benefits, so it is best to seek the advice of your accountant. Ownership is also part of the second point here. As I alluded to before, many people may have insurance but do not know about it. It may be owned by a superannuation fund. When thinking about having a policy in your super fund or even increasing the sum insured, you need to understand how insurance and superannuation works, how to be taxed, and any other restrictions there may be. And like all personal insurances, your life insurance may have additional features which you can add. However, these are not standard from company to company, and it is important that you understand how they work before you sign up. Lastly, we often only start thinking of life insurance when something major happens, like a birth of a child, purchasing a house, or the death of a loved one. When big life moments occur, we must review our financial needs too. On the other hand, life events like downsizing, becoming empty nesters, or the death of a spouse are also triggers for a review. Life insurance is not set and forget. Periodic review is important to ensure that you and your family are covered with the most suitable policy for your needs. If you're unsure about your life insurance, want to review what you have in place, or are not covered and want to discuss your needs, please don't hesitate to contact us to organize a no obligation discovery chat. The details are on our website.